Hey everybody, welcome back to Layman Loans. In this video, we're going to see what is the importance of ITR. So, what is an ITR? ITR is nothing but income tax return. So, we'll see how your ITR plays a very vital role for you to avail any loan. So, fundamentally, what is an ITR? ITR is nothing but the declared value of amount which you are earning to any government institution like an income tax department. What you declare is the amount what you're actually earning. It varies from your income tax return, the ITR, the structure in which you declare and the slab in which you fall actually differs from person to person, from industry to industry, and to what genre they are. So the different categories of people are self-employed people and business people, salaried people, and so on. So for a salaried person, the ITR is different and the tax slabs are different. For a self-employed person, the tax slabs are different. So what is your income or the net profit what you get out of your business is what you declare to the government in the form of an income tax return, and this becomes a valid proof for the banks for them to validate that this is the amount you are getting. So if you are a salaried employee, mostly the company which is crediting the salary to you will actually deduct the tax which is payable by you at the beginning itself. It is called TDS or tax deduction at source. They will deduct this amount every month and then only pay your salary, or they will probably deduct it by the end of the year as a lump sum. And if you want to claim back the overall tax which you have paid based on the different policies or the structures available by the bank, so by the income tax department, like for example, you are paying say 2 lakhs per annum as tuition fee for your kid, that can be claimed as an income tax return and you can get a refund from the IT department. Or you have a home loan EMI which is being paid, then you can get a rebate on the overall interest paid and you can actually get back the income tax return by submitting all these kind of EMI receipts what you collected from the bank. And there are several schemes in which you can claim back the income tax which you have paid. But that mostly happens for the salaried section of people only. If you are going to be a self-employed person, you need to have an auditor and you have to submit the balance sheets and the revenues to the income tax department and declare the net profit what you have got based on the balance sheet. So for example, you are making a monthly turnover of 3 lakhs and yearly turnover of 36 lakhs and you have a net profit of around say 12 lakhs from your business on an annual basis for every financial year. So what is a financial year? It is April 1st to March 31st of the next year is considered as one financial year. So within this period, assume you have a net profit of 12 lakhs, you will have to be paying taxes on this net profit only. So what is the amount of tax you need to pay depends on your overall commitments to other tax saving schemes. So if you have ELSS plan like earning linked tax saving plan, if you have in a mutual fund investment or a kind of SIP products which is called systematic investment plans wherein you invest on tax saving funds, or you have a education loan being paid back, you have a tuition fees to colleges or schools, you have a home loan, all these things will actually make you get exemption from the tax. So based on all these metrics, what you declare as your total taxable income based on the net profit, whatever is your total taxable income, you will be paying tax on that amount. So this is called as ITR, income tax return. So how will this actually impact your eligibility to take a loan? Firstly, if you're going to be a salaried employee and assume you're going to apply for a personal loan of say 5 lakhs. First things what they'll ask is they'll ask for a minimum 3 months or a maximum 6 months of pay slip given by the company. So what is a pay slip? So every month the company actually pays a salary to you. The company will also generate something called as a pay slip wherein they'll clearly mention your name, when you have joined the company, how many days of leave you have taken, what is your basic pay, what is your HRA and all those allowances, and then tell you exactly what is the amount being credited in which particular account. So after this pay slip is given, the bank will actually ask you for giving a 6 months or 1 year bank statement, and they will validate whether this amount mentioned in the pay slip is getting tallied to the amount being credited in your bank statement as well. So assume for the month of January, you've got a salary of 85,000 rupees as per your pay slip. They will check on that particular date whether 85,000 has been credited to your bank account as well. So based on this metrics, they will know whether the amount which you are justifying that this is your salary is actually coming or not from the particular institution. And mostly the amount which has to be taxed is deducted at source by the company itself, and the company will pay it on an annual basis or a monthly basis in its tax returns. So that is the case for a salaried employee. But if you're going to be a self-employed person, like you're running a business, you are a professional who is doing freelancing work to different companies, you're a consultant or you're an interior designer. So all these category of people actually have a lot of transactions in their bank statement, but it is not going to be an exact fixed pattern of income. So 1 month you might end up getting 40 lakhs of income. Next month you will get only 4,000 income. It's quite possible. And your transactions in the bank statement will also be very, very variable. So there is no fixed pattern of income what you're getting. This is the case for many of the self-employed people. So the banks don't actually rely completely on the bank statement alone, but rather they will ask you to furnish the income tax return, mostly a minimum of 3 years income tax return for you to be eligible for any loan. So consecutively, they will see what is the total net profit you have declared to the government or to the income tax department through your ITR. So assume you have declared a net profit of around 11 lakhs this year, and say next year you are applying for a loan, your total profit should be at least 11 lakhs or even more. Certainly, if there's going to be a huge drop in your net profit to say 1 lakh or 50,000, or you are actually suffering a loss, then the banks will become super skeptical and will possibly not give you the loan. So an ITR plays a very, very important role in determining whether you will be eligible for a loan or not. So what you are actually declaring in an ITR is what is your total revenue, what is your net profit, and what is the total taxable income. So this amount is what is a legal proof which you're giving to a government institution that this is what you are actually paying. So banks rely heavily on this particular data, and irrespective of your bank statement, this particular data, that is the ITR, plays a significant role in determining whether you are going to get your loan or not. So for those people who have missed your ITR, there is always a window which is given. It can be up to 6 months or even up to 1 year for you to file your ITR. So if you missed the last year, you can file till the next year. If you missed the actual filing date, you can fill with a small penalty of say 1,000 rupees or 3,000 or 5,000 rupees within the year end or within another couple of months. You can do it. So, but if you are not actually filing any ITR, you don't have any ITR at all, then possibly for you to go and apply for a loan in a bank is almost a nightmare. It is definitely not possible. So that too, if you're going to be a self-employed person, you can definitely not apply for any secured loan unless and until it's a gold loan. Except a gold loan, any other forms of secured loan, you cannot apply without an ITR. So ITR plays an absolutely important role. And if you want or you are looking for any assistance in how to actually create your ITR and apply for a loan, you can always feel free to reach out to us in the link given in the description and the comments. We'll be more than happy to help you on how to proceed further. I hope you got a lot of information in this video, and looking forward to connect with you all in the next video. Thank you so much for your time. Cheers.